Good morning, folks, and welcome back to Almus Market Mornings. In a relief to the oil markets, the US issued a 60-day license allowing Iran to sell oil on the international market. This, of course, brought some relief to the oil prices, which further cooled off. But the statements from both the sides continue to remain volatile. Vice President J.D. Vance said talks went well and Iran had agreed to allow nuclear inspectors back into the country, but the Iranian side rejected this claim. Moving on to the other world affairs, Andy Burnham is all set to be the seventh Prime Minister of the UK in the last 10 years after PM Keir Starmer resigned on Monday. Sterling did not have much of a reaction to this. I think it was well known by the markets. Good morning, JK. Interestingly, despite lower oil prices, yields seem to be going higher in the US. Is there a trend you are sensing there?
Good morning, Swaraj. I think what market is looking at is the inflation, which is somewhat broad-based because even the core inflation in the US was higher. And there is ongoing concern about the increased fiscal deficits almost across all countries, in fact. That is what is keeping the yields well supported. And the increased borrowings this week we also have more than 100 billion of fresh issuances by the US Treasury. We have to see how the market responds, and in the meantime we will have the PCE core inflation as well on Thursday, which will give some more light to how the inflation will is behaving. As well as the market does not have any forward guidance from the Fed, with the new Fed chairman adopting a fresh approach, and so market keeps guessing what Fed will do, and their own assessment of the economic data will actually form the basis for Fed decisions going forward. So I think market is trading cautiously, and there could be rate hikes. Some investment bankers are now actually raising their interest rate hike forecasts. The highest I have seen 3 rate hikes this year, September, October, and December. So that's the environment in which the bond market is working now. Therefore, I'm not surprised that the yields are higher, and that obviously is also supporting the dollar. On the global front, of course, the Iranians declining that they did not accept new commitment in Sunday talks about the nuclear issue is somewhat dampening. Obviously, they are looking at how the current commitments from the US side as well as the Israeli attacks on Lebanon and all, how these are addressed in the coming days before they get into these core issue also. Yes, there was a relief from the oil, further relief on oil prices due to US allowing 60 days time for Iran to export their oil to the world. So oil is seeing a lot of supply suddenly, and that's what is discounted in the current price. Of course, it's difficult to see how far down the oil prices can go. The important level immediately is at 73, and 73 and Brent is the level that was seen just before the war, and then we had a gap up. So markets usually have a tendency to fill the gap. So we could see 73 also, but then I think market is probably hesitant to push the prices much lower from these levels, awaiting the final peace agreement that should emerge, and the road to that is not very easy. Interesting you mentioned about UK politics. Starmer's resignation yesterday coincided with the 10th anniversary of Brexit. Now, the UK has had 5 PMs in the last 6 years since 2019, and the sixth will be elected in the upcoming contest. When you consider that UK markets have been much calmer over a long period of time, the last volatility was seen only in 2022 under Liz Truss during the budget, when UK market saw a big turmoil, particularly in the bond market, with tensions spreading globally for some time, but then eased off after change of guard. What I'm seeing is that there is a lot of political uncertainty in many regions, which the UK is not an exception. We have seen that in France, we have seen that in Italy also. But the markets have increasingly reduced the premium on political stability because the policies are in place and the non-political setups are managing the economy. So I think unless there is a uh, uh, unexpected event which changes the market conditions drastically, markets have started to discount these political uncertainties, and this seems to be an ongoing thing. You can just see the contrast. India has a political stability for the last 12 years, and with strong government, no threat to its stability. But the markets have not given the high premium which traditionally you have seen being given. So that's what it is. So it's just another change of guard. That is how the market is viewing it right now. So no major impact. In fact, yesterday there was a focus on two currencies. One is a pound after this resignation event, and the pound just made a temporary dip, but it's back above, back to almost the levels where it was before the resignation was announced. In yen, we hit a high of 161.92, almost closing in on a 40-year high for the dollar. But again, there was a minor dip from those levels. There is concern. There was a market rumor, in fact, that the U.S. Treasury and the Japanese authorities had contacted each other over phone, and they could have discussed the ways to address this very weak yen. But I think there is no official confirmation of that, and market, in fact, once again has seen the dollar yen dip, but steady above 160, 150. So now the market, since it's at a very sensitive level, the market is moving very gradually. Also, one should be remembering that the dollar yen is not oversold; it is rather overbought. So we will have to see something happen from the official side or on the overall dollar side to see it move away from this tight situation. Market's focus is now definitely on Thursday's PCE core inflation, having seen 1.1% month-on-month increase in the PPI for May. I think the focus will be on this, and of course, the PMI. Preliminary surveys across regions will also be looked at by the market. Rupee saw some weakness yesterday. As I mentioned, at 94.20, there's a strong wall of resistance for the rupee that's rising. So the market is increasingly looking to beat the dollar whenever there is a dip. Despite talk of flows hitting in the coming days. Yeah, I think we are in that range of 94 and 94.80 for the timing. Overall dollar strength is also keeping the rupee strength in check, no doubt. So this can change only if there is there's a large chunky flow which the nationalized banks do not observe. Yes, there is also concern over monsoon, which I mentioned in my yesterday's update also. In fact, the same has been highlighted even in the RBI's latest bulletin for June, where they say that if the adverse southwest monsoon materializes, it could weigh on India's growth and inflation outlook. So there's a caution. Pushing dollar rupee too far down, we could be in this range for some more time. Before we see some significant development either on the dollar or on the domestic economy and monsoon. Thank you.
Thank you, JK. And yes, very interesting sort of references you made, especially on the political front, that, despite so much instability in UK politics, the markets somewhat have been stable because policies have been carried forward. And especially if you look at India, where the politics has been stable, markets temporarily have not been doing well. So, I mean, it's the political premium being attached has reduced quite significantly. Other than that, I think markets are broadly looking at inflation That's pushing the yields higher, and there's large amount of issuances. This week itself, US Treasury is issuing about $100 billion worth of paper, and how that would be subscribed is something market should be closely watching out for. PC number on Thursday will be closely looked at, especially we have to read this in the context that there's no forward guidance by the Fed at this point. So this would be read in that context, how the inflation is doing. I think the new Fed chairman has already made it clear that inflation is their mandate. They'll be closely looking at that. So the PC on Thursday would be a good sort of data point to track. Other than that, the dollar index has been trading on the stronger side. That has kept the rupee strength in check also. Rupee also weakened past 94.16, closing around 94.70 yesterday. We saw this marginal weakness. And of course, concerns over the monsoon has been highlighted in the RBI bulletin too. Monsoon is very fundamental to our nation, and it impacts both growth and inflation. So that will be closely watched. That's it from Smith. Thanks for listening. We will catch up tomorrow with a fresh round of updates.